This podcast is for informational purposes only and does not constitute legal, tax, investment, financial, or other advice. It is not intended to cause or induce breach of an existing agency agreement.
Hello? 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 This is the Vancouver
Commercial
Real Estate Podcast.
And welcome back to the Vancouver Commercial Real Estate Podcast. I'm Cory Wright.
And I'm Melisa Moretti.
Melisa, how are you doing today?
I'm doing good.
Today we have an excellent show. We have our good friend of the show, Doug Porter, Chief Economist for BMO, joining us. We've been inundated with emails from listeners asking us if he's coming back on. And as a podcast of the people, we convinced Doug to join us again and tell us what the heck is going on.
This is a great conversation. Sort of a one-stop shop for everything you want to know about what's happening in the economy.
We talk inflation. We talk interest rates. We touch base on supply chain issues. He talks about housing and labor numbers. And he talks about the Americans and how they affect the Canadians and what's going to happen to the interest rates. So an extremely compelling show. We're very, very fortunate to get Doug back again. Always sort of unwraps what's going to happen. And if we look back at previous episodes, they've almost hit the mark every time. So Doug's going to tell us what's going to happen in 2022, 2023.
Cory, you spent most of the week up in Whistler, did you not? Were you partying up in Whistler? What was happening up there?
So in Whistler, every year, there's a conference put on called ICSC, which is the International Council of Shopping Centers.
Oh, wow.
And what it is it's a big, huge kind of retail-focused trade show that goes on for commercial real estate. And you get everybody in the industry across Canada that comes out for it. So It's a great opportunity to catch up with landlords and tenants and all of that stuff that you see throughout the year. William Wright Commercial, we have a big booth up there.
So you had a booth. Were you manning the booth?
I was in the booth quite a bit. Got to meet a lot of tremendous people. It was a phenomenal weekend overall. I think they said there was about 1,900 attendees at the conference. But for anyone who's been at the conference, you will know there's probably double that there because a lot of people go up for the couple days and they take part in the nighttime activities and don't necessarily take part in the daytime conference. But it was a tremendous show. It was one of the busiest I've seen probably in the past 10 years. And if that doesn't tell you that retail's back, nothing will. The excitement in the air, the optimism in the air, the projects, everything. Everyone's very, very positive, very bullish on how the next 24 months is going to play out.
Wow, that sounds awesome.
So here's the thing. As exciting as the conference was,
you had
good as it was,
even more exciting news this week, didn't you?
It was, I'll be honest with you, I found out about this like a week ago. It was very much anticipated. It was very anticipated. The timing of it could not have been better, if you ask me. I think it's something the world's needed. We've gone through a couple of years of challenging times. We continuously say we are going through unprecedented times. And as Canadians, Vancouverites, North Americans, international citizens, this is what we needed. Nickelback announced their 2023 world tour and they're coming to Vancouver June 28th.
Wow. And how many tickets did you buy?
I got a few tickets to go. I was very excited when I got the tickets. I called my wife and I said, babe, I found the password to get them early and I tried it and it worked. So I called her. I was so excited to tell her about it. And she said, that's awesome. Who are you going to go with?
I was going to say, is your wife as big of a fan?
That couldn't be farther from the truth.
I think your wife and I should hang out.
She probably despises them, to be honest with you.
I think we probably have the same taste in music.
Yeah. So it's fair to say, so she's not going to go.
Okay.
So I do have tickets with no one to go at this point, but I'm sure I will find somebody.
Matt and Adam.
Someone will answer my Craigslist ad or something like that.
Right.
But June 28th, you want to circle your calendars. Rogers Arena. They probably come on around 8 or 9, I'm guessing.
I'm sick that day.
Are you sick that day?
I'm sick that day.
I had 2 free tickets for you and your boyfriend.
Yeah, we're really ill. But thank you.
That's too bad, because if you were going to come to Nickelback, I was actually going to take you guys to Luke Combs as well. But because you can't come to Nickelback, you're unfortunately sick that weekend. My extra Luke Combs tickets are just going to have to go to somebody else then.
It wouldn't be worth it. I wouldn't go to Nickelback to go to Luke Combs.
You're missing out.
But thank you.
You're missing out. Well, I know after right now, you mean all this excitement.
What a great week.
Well, people are trying to absorb. We have Doug Porter back that everyone's asked for. I just told everyone, if they didn't already know, Nickelback's world tour just got announced and they're coming to Vancouver. We don't want to drag this out any further. So without further ado, let's get to our episode with Doug Porter, Chief Economist, BMO, and even more exciting news to follow.
All right, let's go.
This week's episode is brought to you by our great friends at Impact Commercial Group.
Really enjoy working with Impact Commercial. And we should say Al and his team can basically do anything when it comes to lending.
Anything when it comes under the commercial umbrella. You're building a building in development, we got you covered. You're buying land, we'll make that happen for you. You're investing in a property or multifamily building, check. Owner-occupiers looking to acquire their own space, double check. Anything commercial financing you need, Impact Commercial is your go-to.
ImpactCommercial.ca. And we should say over 50 years of combined experience. So trust these guys. They're the right fit.
Best in the business, in my opinion. All right, so we're here today with Doug Porter, Chief Economist for BMO. Doug, how you doing?
Oh, I'm doing well, thank you. Thanks for having me.
Thank you once again for joining us. You've joined the program before, and as I said before we started recording, we have been inundated with listeners emailing us asking, when is Doug going to join us again? So we're so pleased to have you back. I know you're a busy guy. Thank you so much. For those listeners who aren't aware of yourself, Doug, do you mind telling us a little bit more about yourself?
Well, just very briefly, I've actually been an economist for almost 40 years now. Not to date myself or anything. I've been chief economist with the bank for roughly 10 years. I started my career at the Bank of Canada, and not to boast or anything, but I happened to go to school with the current Bank of Canada Governor, Tiff Macklem. And hopefully that doesn't bias my views on the job they're doing one way or t'other. But yeah, I've been a sort of a keen student of economics for quite a few cycles now.
Tremendous. Well, thank you once again. And obviously, like I said, we're very anxious to get into this thing here. So we'll give you as much runway as you need. A lot of the big things that everyone wants to cover off is inflation and interest rates seem to be in every second conversation we have out here. Can you maybe unpack a little bit where we are from an inflationary standpoint? Maybe talk a little bit where interest rates are, and then we'll obviously ask you the questions of where do you think they're going to go?
Well, I think we can almost get to the punchline right away, because just recently we had the Bank of Canada raise rates by a quarter point to 4.5%. And the real revelation in that announcement was that the bank basically told us that that's it for now, and possibly that's it, period. And most of the reason why they had the confidence to say that they think they've hiked rates enough is because inflation has started to cool. I mean, if you look at headline inflation, it's still above 6%. Some measures of core inflation are still around 5%. But when you dig into the details, in the last few months or so, there's been a clear slowing at hand. And as long as energy prices don't fly higher again, we are almost certain to see a pretty pronounced pullback in both headline and underlying inflation in the next 3 to 4 months. Because it was actually early last year when prices really shot higher. And they're going to start; those big increases are going to start falling out of the annual calculation of inflation, and just by the nature of the beast, just the arithmetic points to a pretty big slowdown. But the underlying dynamics also suggest that inflation has started to cool. And just one little factoid I'll cite is in the latest month, appliance prices fell at their fastest rate in a single month that we've ever seen.
Wow!
Or now they had a big run up a year ago, and they're still higher than they were a year ago. But on a monthly basis, they had this huge decline in December. And I think that just gives us a hint that a lot of prices for goods especially are starting to fade away.
Now, is that driven from oversupply and supply chain issues now being corrected?
Essentially, yes. I mean, our view all along is that all the talk about supply chains, it really wasn't so much a supply story as a demand story. It's like everybody in the world wanted to buy a dishwasher all at once in 2021, or, pick your, a piece of furniture or some kind of appliance or something, or even a vehicle. And so all kinds of goods prices just got extremely stressed by a surge in global demand. The supply chain just couldn't handle it. And now what we've seen is as things reopen, people aren't spending so much on goods or shifting back to services, or, you've got as many dishwashers as you need. So there just isn't as much demand. And yes, some of the specific kinks in the supply chain have been worked out. And so prices are basically normalizing for a lot of goods. Our concern, though, is that that's not where the story on inflation is now. Now the story is more on services prices, and services are driven mostly by wages. And so I think the key thing to watch now is, well, what do wages do? And even there's a little bit of encouraging noise. We're still seeing solid wage gains, but they're not shooting higher in either Canada or the U.S. And they really don't look like they're going to become a big inflation problem. So overall, it does look like a somewhat more friendly picture for inflation as we go forward.
So now, one thing that the big R word out there is everyone's concerned about recessions and stuff like that. And obviously, you probably see the front lines of how that plays itself out or whatever. Do you worry that there's going to be a recession? And if so, how mild or how bad would that recession look, do you think?
Yeah, and of course, that's been the debate in financial markets for quite a few months now. Our official view, I have to say, we're pretty much in the middle of the consensus. They're looking for a so-called mild or shallow recession over the next year. Look, this is not your parent cycle. This is a very different animal we're dealing with. And one of the things that makes this cycle truly unique is the amount of pent-up, pandemic savings that Canadians are still sitting on. There's different measures of how much savings are out there, but the most conservative measure suggests it's about $130 to $140 billion. That's roughly 10% of disposable income. That's a big, big number that people are still sitting on. And we think that will help consumers get through this pretty challenging episode. So that's why we think it's going to be a mild downturn and not a really severe downturn. And in fact, if anything, the action we've seen in financial markets so far this year suggests that investors are actually betting on a so-called soft landing. In other words, the U.S. and perhaps the Canadian economy avoiding recession altogether. I'm still a little bit skeptical of that sort of Goldilocks scenario, but that's the way investors are betting financial markets right now, is that we might get through this without even a mild recession. We might get through this with just a cooling in activity, and that's the official view of the Bank of Canada. By the way, their economic forecast, which they just published recently, the latest quarterly numbers they came out with, still look for about 1% growth this year. That's sluggish, but it's not bad, and it's not a recession.
So is there any chance that, let's say, things do cool down and stuff like that, and then positive news kind of, the FOMO effect kicks back in and all that stuff, and consumers are sitting on all this money? Would there be a chance that we might even have kind of like a hockey stick-like recovery where we kind of come to a bottom or even a plateau, for lack of better words, and then everyone gets excited and we see a surge in the economy, everything from housing prices and activity and stuff like that?
That's definitely a possibility. And I would say it's where we would really see it would be in the housing market in particular. And frankly, in some ways, I think that's an outcome the Bank of Canada does not want to see, because inflation has not been cooled enough yet. As I said earlier, while there are some encouraging signs, hey, headline inflation is still above 6%. Their target is 2%. We've got a long way to go on inflation. And so if things turned a little bit too quickly, for instance, let's say this spring, home sales came bouncing back for whatever reason, because, there is this view that, hey, we're going to avoid a recession. That would not be good news for the Bank of Canada, because a cooler housing market is part of their overall plan to basically cool the economy and get inflation down. So if the housing market came, bouncing back too quickly, that would actually be bad news for the Bank of Canada. It might mean they'd actually have to turn around and start raising interest rates again.
Do you think the target of 2 to 3% inflation is realistic anymore?
That's a very good question. And, that was an issue even before the pandemic, whether a 2% inflation target was actually really appropriate or not. The one thing I would say is it's a good debate, and I don't think there's a clear answer. Is it realistic? I think it is realistic to get inflation back down to 2%, but it's not going to be easy. And the other thing I would point out is, they actually first started targeting inflation more than 30 years ago in the early 1990s. And since they started targeting inflation, it's been almost 2% on the button on average over those 30 years. So it's certainly doable. It's certainly realistic, but it's not going to be easy to get there. And I take the other part of your question is, does it actually still make sense to aim for 2%, or, should they actually aim for somewhat higher inflation? And I think that too is a very reasonable debate. Does it actually, there's nothing magic about 2%. Perhaps the target should be a little bit higher, but the thing is it would probably be a mistake to change the target when inflation is so much above it right now. Like, because in the future, let's say they change the target to 3 or 4%. Let's say in the future, for whatever reason, inflation got up to 10%. Then everybody would think, well, they could always change the target again, and then you would never take the target very seriously if they were changing the target when inflation got above target. So, eventually maybe it would make sense to rethink that target and perhaps even adjust it, but I wouldn't do it right now, not when we're in the thick of the battle.
Yeah, that makes a lot of sense. You touched base there just briefly on the housing market. What is BMO's kind of thoughts on that this year? Maybe just obviously we're a BC focused podcast, but maybe not just BC but Canada. Where does BMO think this housing market goes this year?
Yeah, and first of all, when you look at BC, it's not that terribly different from the national average. It's actually relatively close. It's maybe held up a little bit better, and part of that is due to the fact that the national average is being dragged down like a rock by Southern Ontario, which has had the biggest party during the pandemic and is now having the biggest hangover. Our view is we're probably more than halfway through the correction in home prices nationally. Since they peaked in February, they're down by 13%. Our view for some time has been that ultimately nationally they'll drop by 20 to 25%. But again, that number is somewhat ballooned by what's going on in Southern Ontario. Places like London, Hamilton, Windsor, they just rocketed during the pandemic, and all those cities are now already down by 20% or more, and they're probably going to correct even more so. So we think we're well advanced in this correction. Our view is that even though rates probably aren't going much higher, if at all, the market is still digesting that big run up in interest rates we've had in the past year, and I'm not convinced that the market has completely absorbed that rate increase. When you think about it, a lot of people actually haven't even faced the full brunt of that backup in rates. Even people on variable mortgage rates aren't necessarily seeing higher payments yet. And meanwhile, there are all those people locked in for 5 years, many years ago, and it's now rolling over. And a number of mortgages will come due in the next year or two, and they'll get a little bit of an interest rate shock when renewal time comes around.
Yeah, no, I've timed mine perfectly. I think I'll be coming out right at the peak of interest rates off my 5-year fixed. So I'll be gladly getting that phone call and then probably trying to pick myself back off my chair when he tells me what my new rate is and what my new payments are. Doug, we talked there about the housing market and stuff like that. The interest rates, obviously, we saw the 25 basis point increase earlier this week by the BOC there. Where do you guys think interest rates go for the remainder of the year? I know they kind of came out and they kind of said, hey, we're going to kind of halt it here. Let's see how it goes. Do you guys predict that based on what you're seeing on a national level, that there's a chance those rates could still continue up? And then I guess the flip side is, do you think at any point in 2023, those rates might come off?
So our official view is that the Bank of Canada will be on hold for the rest of the year after that small move in January. Okay. And we've been of that view for some time. And the fact that they actually were so clear in saying that they're moving to the sidelines for now basically fit right in with our forecast. So it was actually gratifying to us. In terms of which way do the risks lie to that forecast, like is more to the upside or the low side, I've been pretty consistent saying that if we're going to be surprised, it's that the bank might need to do a bit more in the months ahead. I don't totally rule out the possibility of rate cuts later this year, but what I would say is one of two things has to happen. Either inflation has to come down spectacularly more than what we expect, or the economy has to weaken a lot more than what we're expecting, like worse than just a shallow recession. I can't rule out either one of those things, but I don't think either one are particularly likely. So I think probably the most likely outcome here is that the bank just stays patient. As I said earlier, it's going to take time to get inflation from 6% closer to 2 to 3%. That will take a number of months, maybe even a number of quarters. And our view is that rate cuts are probably a 2024 story, not a story for this year.
And when you discuss 2024, do you guys think rates are going to come off dramatically, 50, 100 basis points from where they're at now because of, cooling inflation and all that stuff? Or do you think it's going to be much more of a modest decrease that could take, 24 months type of thing to try to work itself in?
No, it's interesting. Once the Bank of Canada gets going, they tend to move relatively quickly. What we've got penciled in at this point for 2024 is about a percentage point of rate cuts. And we think that would be 4 equal, quarter point trims over the course of that year. By history, that's not a massive move by any means. And we think basically what that will do is get rates back closer to something, closer to neutral. And possibly even by the end of 24 or early 25, we'll be around what we would consider to be neutral, which is something more in the twos for the Bank of Canada's overnight rate, not the current 4.5.
Our neighbors to the south there, obviously, they have a lot of impact on our economy and interest rates and that stuff. How do they fare over the same time period? Do you foresee them kind of mirroring kind of what our predictions are up here in Canada, or is there anything down there that could happen and then kick us into a bad position if job numbers fell dramatically or something like that? Do you guys foresee anything that might happen down there that could affect us dramatically up here over the next year?
It's amazing how closely the Bank of Canada and the Fed have tracked over the last year. And by the way, it's not always that way. But the Bank of Canada has actually acted as an excellent leading indicator for the U.S. Federal Reserve. We think the U.S. is going to do a little bit more than the Bank of Canada. We've got them going another 50 basis points from here, and there's a slight chance they do a bit more than that. I mean, the Fed has actually so much as told us they're going to hike rates by another 75 basis points. We think they might slightly cool that just because their inflation numbers have come in a bit better than expected as well. The one thing I would just for listeners to keep an eye on, you're going to hear a lot more about this in coming weeks, is just this political game of chicken that we're going to see between the White House and the House. And that's over the so-called debt ceiling. That could cause a little bit of market turmoil, probably, in the late spring or early summer, if they don't come to some agreement beforehand. We've had a real showdown on this issue before, back in 2011, and it led to a lot of market turmoil that summer. Frankly, I think as a long-term investor, it's just noise, it's political theater. But unfortunately, it can cause some real disturbance in financial markets over a short period of time. As I said, it's basically just a game of chicken, between who's going to back down first, the Democrats or the Republicans. But unfortunately, the financial markets can get caught in the crossfire, and that could lead to a little bit of upset in financial markets. This, as I said earlier this summer, just something to be aware of.
Do you think just sort of how Canada's performed over through COVID and obviously into 2022 and 2023, do you think there's more foreign investment that comes into our country? Because it seems like we've been, maybe I don't want to say a solid bet, but we've been much more stable than some other countries. It seems like over the past 2 to 3 years, do you see more foreign investment coming into our country?
It's not really obvious. And, if you look at the Canadian dollar, I mean, as we speak, it's around 75 cents. It's actually weakened over the past year, despite the fact that commodity prices were fairly solid, especially, for the first half of last year. It was a bit disappointing that the Canadian dollar faded a bit. So, there's certainly no sign that we're getting this wave of investment into Canada, and specifically on real estate. Of course, we've got this, I would say, somewhat surprising decision by the federal government to try to block foreign investment in residential real estate. But I do take your bigger point that I do think Canada has, on balance, fared reasonably well. And on the fiscal side, we often point our figures and complain about the spending, especially at the federal level. But government finances are, and especially compared to most other major economies, are actually reasonably solid in Canada, especially versus the U.S. and Europe. And I personally think that that's a longer term source of strength for Canada. And by the way, just as a quick side note, most of the provinces are actually in better financial shape now than they were before the pandemic began. And I just find that astonishing.
So you have a bird's eye view from a national level of what happens here. Let's say if I was Doug Porter, where would I be investing from a real estate standpoint? Is there a province or a market within Canada that you guys are very optimistic on, or you think that could outperform maybe other provinces in some aspect?
Oh, I think short term, over the next year or two, there's no doubt about it. The prairies, especially Alberta, really, well, first of all, they've held up very well in the last year. I think they will continue to hold up relatively well. And there's two simple factors behind it. One is they just didn't have the boom before or during the pandemic, so they're not going to get the correction. They haven't seen the correction. Calgary prices are actually above where they were a year ago. Just to give you an example, they're one of the few cities in the country. The other issue is I do believe their underlying economy is still being helped by relatively high commodity prices. Even though energy prices have backed off a lot, they're still relatively favorable for those provinces. So I think in general the prairies look good short term. Longer term, I do like the winners of the past. I still like Vancouver and Toronto. Even though they are going through a correction right now, they've still got wonderful long run fundamentals. whether it's the population story or the underlying economic story, I do continue to favor, the two of the biggest cities in the country.
Anything that would be of concern on the horizon that maybe, obviously COVID crept up on us, that we, caught everyone off guard. Is there anything out there that you think, or anything that's maybe, starting to bubble somewhere that may be surprising to a lot of people in the economy that may catch us off guard in some retrospect and throw a kink in the whole recovery?
Well, I did mention the U.S. debt ceiling drama, which personally I don't think is a long-run concern at all, but it is going to make a little bit of noise over the next 6 months. I think what I would go back to, what's the biggest risk right now? And I'm not talking about all the geopolitical risks. I mean, frankly, if you were to ask me what keeps me awake at night, it's not the economy; it's some of the geopolitics we have to worry about. But specifically on the economy, I just have to wonder whether inflation is going to continue to fade as quickly as it has in the last couple months. We've been helped a lot by a come down in gasoline prices, but as I said earlier, concern now is that services prices are going to be the issue, and they're driven by wages. And the labor market's still really, really tight. A lot of workers want to make up for what they've missed on the inflation front in the last year or so. And I just am still a bit concerned that inflation might not fade away quite as quickly as we all hope, and that the Bank of Canada and the Federal Reserve actually still have to raise rates further. That to me is probably the big risk for the economy and for the real estate markets, that that we're all going to find out in 6 months that, hey, the bank and the Fed didn't do enough and they have to go more.
So all in all, if I hear everything correctly, that if everything kind of goes as planned, 2023, 2024 might not be as bad as maybe we first predicted it, and we might find ourselves in a decent position come 2024 with rates coming off from an economy standpoint.
Yeah, I think that is the main hope. And really the thing that's going to determine whether we have a soft landing or whether it's only a mild recession or not is what happens to inflation, especially in the next 6 months. I think we're going to have a lot of clarity on this by the middle of the year in terms of whether inflation really has broken or not.
So Doug, we can't thank you enough for joining us. I know you're a really busy guy, and like I said, all of our listeners will be thrilled to have this episode put out next week. But before we let you go, same as we did last time, we have a 6-pack of lighthearted questions we like to ask all of our guests, so we kind of get to know you a little bit more outside the office. Is that okay? You stick around for just a couple more minutes?
Yeah, sure. And hopefully I'll probably give you a different answer than what I gave last time.
The 6-pack is powered by our great friends over at Red Point Law.
Oh, the guys at Red Point Law are fantastic, Cory.
For all your legal needs when it comes to commercial real estate, visit them at redpointlaw.ca. Okay, so first question up, and this can be the Ontario version. Favorite restaurant or bar?
In the last 3 years, I have barely eaten out at all. So it's almost like I've completely forgotten, what restaurants there are. But in Toronto, so the Auberge is a great restaurant, and I would have to rate it as one of my favorites.
All right, you're on death row. What meal are you eating?
This is the last one before it's all done. So it can be anything you want.
Okay. So spaghetti and meatballs.
Oh, that's good.
Really?
I would second that. That's my go-to, spaghetti and meatballs. That's the first time we've had that one too. So I give that one a thumbs up. You find yourself at a bar, you've had a few drinks, someone sticks a karaoke mic in front of you. What song are you singing?
Well, first of all, I would clear the bar out with whatever I sing. Bohemian Rhapsody, that would really clear it out.
That's a good, again, I don't think we've had that one just yet. That's a good, very courageous pick.
All right, next question. What are you currently binge watching?
I'm actually very new to binge watching. That's only a concept that began for me when I had lots of time on my hands during COVID. Yellowstone, actually, I did enjoy it. I completely ignored it, and then suddenly I started watching it and went, hey, this is actually pretty good.
Yellowstone.
That's come up a lot on the podcast.
Yeah.
I've never seen it, but I guess I might have.
I'm with you. I've never seen it, but I've heard lots of people. I know Matt and Adam watched it.
Yeah.
They raved about it. So it seems like it's a good one. A book recommendation, Doug, for all of our listeners.
I have read a lot of books recently. Okay, I'll give you one that I recently read that I had zero expectations for, but I found myself really enjoying it. And it was Surrender by Bono.
Oh.
I'm not a Bono fan. Full disclosure, he's roughly my age, so I could really relate to a lot of his upbringing, his early musical taste. But, he's a very interesting guy, I will admit. He's met pretty much anybody who's anybody. and he's got views on just about everything. But he's actually a very well-grounded, reasonable person, and I found it a fascinating book.
I was never a U2 fan, and I got dragged to a U2 concert one time, thinking like, "Oh, this is going to be great." It was outstanding. It was outstanding, and I definitely would say Bono was quite the character. Really, really good entertainer. Kept everyone going, and seems like a very intelligent guy as well.
Oh, for sure.
All right, Doug, last question for you.
All right, to continue that, your favorite band?
You mean all time?
Sure, favorite band of all time.
Ever.
Anyone. If you're driving and you had one CD to play, who are you playing over and over again?
Oh, it's so cliche, but if I could only have one band, it would have to be the Beatles. I know it's ancient history, but let's face it, I was actually debating between Queen and Led Zeppelin, but or maybe even the Stones. But no, or even Pink Floyd. But no, I'd have to say the Beatles.
All right, Doug, we got one more bonus question here. A piece of advice for our listeners for 2023. What can they expect, and maybe what should they avoid?
So, despite the buoyant performance by the markets at the start of this year, I would personally still play defense a little. It doesn't mean you have to be hyper conservative. I would be cautious, given how much uncertainty there is over inflation and just some of the geopolitical uncertainties out there. I'd still err on the side of caution, even with this really nice start to the year by financial markets.
It's great advice. And Doug, once again, thank you so much for joining us. We really appreciate it. How can our listeners find out more about what you guys are doing over at BMO?
So your listeners can always go onto our website. You don't need a password to see most of what we publish. It's just going to BMO Economics. And if you don't have time to read everything we put out, the one thing I would recommend is our weekly publication that just came out this week, called Focus. It's tends to be about 15 to 20 pages, and I would say that's the go-to piece that we produced.
Well, Doug, thank you once again for joining us. This is the third time we've had you. We appreciate it. We look forward to having you on again in the past, and thank you for all the advice as always.
Thanks, Doug.
Oh, thank you. And I'm just sorry we didn't have time to talk about the Leafs. But other than that, thanks for having me again.
It's okay. Well, the problem is, to be honest with you, we kind of thought those roads, but if you see how desperate we are and how poor we're doing as Canuck fans over here, we're got a coaching change where everything, you guys are almost top of the league. So we got to give it to you guys this year. So it's eggs on our face again, as always.
Don't worry, we'll go the same distance in the playoffs. So.
at least you guys are in the playoffs.
Hopefully.
Thank you, Doug, once again. We really appreciate it.
Okay, thanks a lot.
Take care. Bye-bye.
Okay, bye now.
There you have it, folks. Our interview with Doug Porter, Chief Economist, BMO. I'll be honest with you, I feel 10 times better.
That was an awesome conversation.
It was great. And there's guests we have on, and I'm not the smartest guy in the room by any stretch, but I do like to think I kind of know what I'm doing in my industry. Every time we bring Doug on, I feel stupid. He is so incredibly knowledgeable. Knows, they've predicted so many things over the past year and a half, and we've had Doug on various times, and they've almost hit the button every time. I feel tremendously better after that conversation with him of what BMO's position is for 2023 and 2024, and the optimism that there may not be a recession at all.
Yeah, Doug's the guy you just want to ask the questions and let him go.
Yeah, no, it was great. We covered off a whole bunch of stuff there. Talking to a lot of residential agents lately.
Yeah.
It seems like things are picking up in your world. Is that true? Is that fair to say that things are?
It's felt that way, absolutely, in the last few weeks. Hoping, February will bring some more inventory. That would help us a little bit too. But I think that buyers' sentiment is changing, particularly with the last interest rate hike and just knowing that could definitely be the last one for a little while. I think that, people want certainty.
Now, do you think
that's going to help?
Do you think it's fair to say that you might see more lateral type purchases where someone goes from maybe like a 1-bedroom to 2-bedroom condo versus maybe condo to townhouse, just purely based on interest rates and the stress test? Do you think that will play itself out? And
I could see that making a bit of sense for sure. I think right now people are just holding off on doing any transactions.
Yeah.
But that would make sense to,
Are you starting to see things sell? Are things that are out there, is there sell-throughs starting to happen a little bit more now than they were maybe the past 90 days?
Yeah. I would say so, for sure. Particularly in like the lower price brackets, right? Where it's more attainable, kind of like you were saying. Like, are people, moving within those smaller price brackets? Well, things are still selling.
Coupled with what you're saying, what Doug's predictions are, and where BMO's at, I think we're in for a good time.
We're optimistic.
I think things are going to work out.
That's the word
really
of
well.
the week.
The word of the week is optimistic.
Optimistic.
And Nickelback.
That's the word of every week.
That's the word of the nation right now. After they announce their tour, the whole world is going to come together now and celebrate the past 3 years by attending a Nickelback concert anywhere in the world.
I just want to say this on air that Cory prompts me every week to ask him about Nickelback. He says, ask me about Nickelback.
Yeah. Well, this week we had something to talk about.
He needs a space. He needs a space to share.
Nobody else will give me the runway to talk about Nickelback. And I know if I start, because the record button's closer to me than you can't hit the stop button. I have a good 20
arms
seconds
are too short
before you get up and run over and hit the stop button. So
yeah. All right, Cory, good talk. How can people get a hold of you?
Why do I feel like you're trying to get me off here? Just because I'm talking about Nickelback, you're trying to shoo me away?
I'm just eager to go listen to their new album.
Oh, well, in that case, people can reach me anytime by email at cory@williamwright.ca. They can visit our website, williamwright.ca, and sign up for the latest and greatest news. Or they can call our Vancouver office, 604-428-5255. Let us know what you're looking for. We'll gladly put you in touch with the best broker throughout the province. We have Kamloops office that officially opens next month, and then our Central Island office located just outside of Nanaimo. That's going to open the following month, late February, early March, once construction wraps up. And we've got some tremendous teams in both markets now to serve you. So that gives us 7 offices province-wide to help you out.
Wow, great things happening at William Wright Commercial. And you can get a hold of me at melisa@vancouverrealestatepodcast.com or 778-869-4477 for any of your residential needs.
Great episode again this week. Another great episode to follow. Thanks so much for listening, guys.
All right. Have a great week.
Subscribe today.